Hey guys, welcome back. Hope you had a good weekend. We're looking at Monday, March 8th. Things are looking more and more bullish for GME. Want to give you a little update. If you're following along last week, each day I was kind of getting more bullish on it. One of these days I was like, I don't know, is this day. This day I thought the next day might be red just because we didn't break this new high on this day. And we had these candlesticks below the 9 moving average. However, once aftermarket and pre-market, it looked like it kind of found a floor here, and then I was bullish on the next day. Sometimes these bull flags kind of droop down, as this one did a bit. And technical analysis isn't always right. So anyways, yeah, so basically throughout the week though, I've been bullish on it, and then this day when it held this floor, I was like, all right, this is looking good. These kind of held the supports here, and we've just been climbing. And then this day was good, nice bull flag here. After hours was good. Again, Friday was very good, nice bull flag. I would have been scaling in more, however I feel like there'll probably be a drop, but that's changed now. I'm not sure if there will be a drop or not. So with the Volkswagen squeeze, there was a big drop a few days before it actually squeezed, like 3 days of dropping, I think 3-4 days, and it brought the price nearly all the way back down to like pre-squeeze run up at all, which would be like 40 bucks for us. I'm not sure that's going to happen with this one anymore. A lot of it is because the DTCC rules that they're trying to implement, and I'm going to show you really quick. If you haven't heard, basically the hedge funds are getting so deep into it on the short position that if they have to start covering, they could go bankrupt. And if they go bankrupt, then it's pushed over to the brokerages. I can't remember the order. Basically, there's a clearinghouses, there's the brokerages, and it just keeps getting pushed down the line for who's going to cover the loss if companies and organizations, whatever, are going bankrupt. So the DTCC would be, I think that's one of the last straws that would have to cover this. I mean, I guess the government could higher up, but the DTCC basically is implementing new rules, probably because they see this coming. And so here they are pretty much. Before they had the clearinghouses, they'd have time to basically on the failed to deliver. So the shares that they couldn't deliver because they were naked shorts, they didn't actually have any shares to deliver. They'd have so much time. I don't remember how many days it was. Not a huge deal. But what matters is that they're changing it. They're making it much shorter time, way less time, which is also calculated and collected daily. So basically now they're able to collect the data daily to see how many shares are actually failing to deliver, and they want funding within 1 hour of demand, which is kind of crazy. I didn't go through and read the whole thing. You're more than welcome to, but basically to me, I just see that yeah, they're tightening it up, so they're not going to be hit with this huge bill from all these massive shorts that are naked and that will be very difficult to cover for these guys that were shorting it. They're just not going to have the capital to cover it. So they're getting pressure from behind, and with that, just the news of that, I'm not sure exactly when it's being implemented. People are saying it's on Monday, it's on Tuesday, it could be a week or two. I don't know exactly. It just depends on how you kind of, I'm not an attorney, but it depends on how you kind of decipher the wording here. At any rate, though, the fact that this is now getting spread around, this is now coming, I think it's causing a run up that's going to be faster than we had last week. So I think that's why we're at pre-market right now. We're already 10% up. We were 4% up. Let's see. Yeah, we were 4% up at the end of aftermarket yesterday, and now we're 10% up today. So it could start to get crazy. You might not have a big deep dive before, which I was kind of hoping for, maybe expecting, and we could still, but yeah, I don't have a whole lot of exposure on the option side. I have 2 calls expiring on Friday for 800 strike, and then I've got shares, of course, but I might kind of play it today and not really wait for a big dip and just kind of try and buy on one of the lows for some calls for this week, maybe for next week, but probably just for this week. Keep it short term to not spend too much capital. And then there's another post I want to show about kind of how the gamma squeeze how the gamma squeeze works and why it's not always the best just to buy all the way out the money call options. And so I wanted to show that here. It's kind of interesting. I read all about this. If you don't understand options, don't do it. Just hold shares. Or, I mean, do whatever you want to do. This isn't financial advice, but that's what I would do. And that's what I did when I was learning. I just would trade shares. Once I learned shares really well, then I moved on to options. Once I lost a bunch of money with shares, and I was like, hey, I want to lose a lot of money with options. Here we go. But yeah, basically, if you understand options, this will make sense to you. It goes into kind of the Greeks, but some of these options that are, since GameStop is so volatile, some of the options that have higher strikes, you're actually not getting as much leverage as you would imagine. And I was noticing this just because the prices of these options themselves are still so expensive compared to ones below it. So it's pre-market now, so you can't really tell because these haven't been updated. You can only trade options during market hours. But to give kind of an example, I mean, you can see this already, this 800 option, because people are just going to the very top option and buying it. But look, this is actually more expensive than this one. And you want an option closer to the strike, always. It's better. And look, this one's 85 down here. Not to say when market opens, this is going to all stay the same. But this one actually might not be. Yeah, because that one, the ask is 85. So you kind of have to look down the option chain and see. There's oftentimes irregularities and inconsistencies, and you can find a cheap one in here that someone's asking less than ones above it. And depending on who you're using, it's all kind of the same. Robinhood has the same type of deal. This is Webull. But the point was, let me show you the math here. It's pretty interesting. So to find out your purchasing leverage on these options, you take the delta, you multiply it by the stock price, and then you divide that by the options price. So, and the reason why he's putting this article here on Wall Street Bets, he was pointing out that the 800, where is it right here? The 300 call, on March 19th, it actually only gave you 0.4 purchasing leverage, whereas the $40 call, which was in the money, gave you more purchasing leverage. And then if you go even further out of the money, or no, further in the money, in between those two, you're getting 2.5 times. So basically, when you go this far out of the money, typically your purchasing leverage is higher. But just since it's so volatile and so many people are buying so far out of the money options, they're going for a lot more. You know, people basically they'll have it as high as people spend money on it, and that's kind of what we're seeing and why I think it's causing this. Also, with a gamma squeeze, it's not going to squeeze unless the strike price gets near the option. Once it starts getting near the option, then the market makers have to start scrambling around to try and find 100 shares just in case you want to exercise this thing. It's in the money. If GameStop closes at 400 today, great. Your $800 call option, though, is not going to force any market makers to buy 100 shares, because basically the delta neutral also, you have to, that's in this article. This is a really good article if you understand. You just search on Wall Street Bets, deep dive on the actual math behind gamma squeezes. But yeah, so what will cause the gamma squeeze is if your option is closer to the money and the market makers basically have to hedge by buying the shares because you might exercise. But then the last point here was just talking about the purchasing leverage. So if you're going way up here, you're not going to necessarily get as much purchasing leverage as you would down here. And you take the it was the delta times the strike or the stock price divided by the options price. Okay, delta times the stock price divided by the options price. So here's the delta, and I think you can see this on Robinhood too. Check. You used to be able to see all this stuff, maybe on the app, maybe not on the or no, yeah, you can click into it, maybe. Yeah, so here it is. So the delta, you guys are still using Robinhood. I use it for a long-term account. I don't like trade on it at all. I stopped trading on them when I noticed they were skimming, basically giving you terrible fills. So it'd be the delta is 0.32. Let's just take this one for example. And it's a little different right now just because the market, it's not open, but we can give an example. Delta times Stock price, is that right? Yep, stock price. Nice and slow, nice and easy. Stock price right now is 153. It's not really, I think, because this doesn't show after hours. Times 153, and then we're dividing that. So you could do equals and then divided, or just divided. But we'll do divided by the options price. So how much it costs to get into this option. This option costs 9.38. Divided by 9.38. That's 5.2. So that shows you your purchasing leverage, which is basically 5 times. So this money would give you 5 times purchasing leverage, which you want a lot of leverage if you think it's going to go in that direction. This isn't going to be accurate right now, like I said, because this option price hasn't updated. This actually is an updated price. Yeah, because it's changing. This hasn't updated. This will be more expensive once the market opens. So this purchasing leverage will not be 5.2. But the higher the number this is, the better. If you go all the way up to all the way out the money, 800, and this purchasing leverage isn't higher, then it's less value basically up here. Given that those cost more, and I get that. And then you could even think about debit spreads, and yeah, there's a lot to options. Tons of ways to make money in the market. Even more ways to lose money in the market. Be safe out there. Don't mess with options if you don't know what you're doing. GME hits 5K a share. You know, one share is worth $5,000. That's sick. But it's 10,000 share. One share is worth 10K. So you don't have to really do options when it's going to be this crazy. If it's going to be this crazy, I'm bullish on it. I like the stock. Yeah, well, I'll try and keep you guys updated. I've been updating the Twitter more often. It's just so much easier than doing YouTube videos. And I don't have enough subs yet to update YouTube with the little messages and notes or whatever. So yeah, hit sub up, like up, comment down. Happy money sticks around. And then I'll be able to message out to the YouTube subscribers with what I'm doing, my plans. But basically, yeah, like I said, I'm probably going to be paying a little premium here pretty early on, because GameStop, I'm not certain it's going to settle down now that the DTCC has come up with these new rules where they have to basically, the hedge funds and those that have all these shorts, they have to basically come up with these shares that they've just been able to push back and back and back and never produce. So I think that's putting a lot of pressure on them already here in pre-market. So it's going to be wild. I'm stoked. Thanks for watching, guys. We'll see you soon. Follow us on Twitter at HappyMoneyYE. And we'll be back soon with another video. Probably, if this thing starts getting crazy, I'll try and update with videos. Oh, one other thing for me on selling, on getting out. I've made some mistakes with GME. I made some with Rocket. I made some on GME, but I could have made much more. And yeah, I read it on actually Wall Street Bets, and it was a great quote and a great phrase and a great rule. And I've actually written it down on my sticky note here on my screen. And if it's good enough for a screenshot, it's good enough to sell. So I have screenshot equals sell. So on the last run up for GME and Rocket, I was taking screenshots. And basically I wasn't selling enough. And yeah, that's it. So I think that's a good thing to do. I'll probably just end up taking less screenshots because I'm like, I want to hold it. It can go higher. But it's just a good reminder. If I'm about to take a screenshot, I will remember that now, and I'll be like, okay, maybe I should sell this thing. Or maybe don't tweet about it, because sometimes I'm tweeting about it and then I'm like, wait, I'm missing my sell. Thanks for watching, guys. We'll see you soon. Yeah, peace out.